Buy every share of this stock you can. I'm not a financial advisor, but some financial advisors might say it's a good idea to buy as much as possible of this stock before December 1st. The company is IREN, ticker symbol IREN. They have a $10 billion 5-year deal with Microsoft. They were a Bitcoin miner that transitioned to a data center compute provider for the hyperscalers. Think Microsoft, Amazon, Google. And they are down significantly right now. That's where they're at. But they look to be bouncing, and a lot of speculation names came down. And so it seems to offer a good risk reward. They are a preferred partner of NVIDIA. And in the same way that their sister company, Wolf, ticker symbol WULF, had a significant bounce recently, 4 green days in a row, I think IREN could have a bounce like that as well, which we'll look at the chart, but 4 green days in a row is no joke when these companies are so low priced. So that's IREN. And then the other company that could be interesting to you as well is Albemarle, ticker symbol ALB. They do battery materials. So they're a lithium company, which lithium is used for lithium-ion batteries, but they also have other chemicals as well that go into batteries that they produce. So you can bet on this company without betting specifically on, say, Lithium America, because although Lithium America has done well in the past, it's had its down moves as well. So this is a more broad-based energy storage, lithium-ion battery, etc. play. It's a chemicals company, and they have over $1 billion in revenue. So this is very different than IREN. But both of them, I think, are at very favorable spots, and definitely in the eye of the storm for batteries, energy storage, data centers, compute provision at this moment. So this isn't financial advice, but I hope this helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's IREN. 140 million is up from the previous quarter. Revenue from Bitcoin is up 24% year over year. But what they're really trying to move into is AI cloud services. Revenue grew to 3 million from a little under 3 million in Q2. So it's not a lot. It's actually a tiny amount. But it's a step in the right direction. And they do have that NVIDIA preferred partnership, which gets them access to NVIDIA GPUs. I think NVIDIA has a number of preferred partners, but that $10 billion contract with Microsoft over the next 5 years is a big deal. And that sort of separates them a little bit from their competition. So that's the next steps, this minor AI infrastructure cloud firm combo. And if they can just make that transition in its entirety, they're really going to have strong prospects. So that 3 million AI cloud business is not really much right now, but they're definitely headed in the right direction. And here are their peers that people talk about. So we'll look at that in a moment right after we take a look at the chart. So this is the chart. It's down significantly after earnings. It's no big deal. The market as a whole came down after earnings. So although this earnings reaction looks bad, I mean, it's almost halved from 80 to 40. Keep in mind, this company also went from, what is this, $5 to 80, 1,200% since the April lows. So they're up a lot. And this is this bounce that is possible. This is this bounce that came in Wolf in the last 4 days. It's significant. And IREN could have something similar. 1, 2, 3, 4. This is kind of a red day, actually. But still, 30%. I mean, on a ticker that trades 40 million times over $10, 400 million a day, you can definitely put 400,000 in there and barely move the spread at all. So I think Cipher is in this conversation. Cipher, ticker is CIFR, and IREN as well. But IREN hasn't had a bounce yet, so that's the opportunity that is showing up right now. These other companies, Mara and Riot, don't appear to be going up really. or having a chance at that. I mean, this is really slow, continued selling. Sure, right at a bounce, but they're also just very choppy over a long period of time. These are kind of the original Bitcoin miners. I mean, this over the last 3 years, they've really not been interesting at all. To, compare that to CIFR, Wolf, or Iron, and you kind of see how exciting this move into data centers from simply Bitcoin miners is for the price of the stock. So that's the comparison. CleanSpark, I believe, had a 100% miss on its recent earnings. So, it had a positive reaction, but I don't think these earnings were good. So you have to kind of take some of these companies with a grain of salt. Hut looks okay. BitF and BitDeer are sort of similar, but I mean, this earnings reaction is very worrisome. BitF, Bitfarms, maybe you'll get something worth buying over this level, but it's a $3 stock, and HUD is going to take a little time, I think, to get a little less choppy. So I do think that the best one right now is Iron, and that Microsoft partnership is no joke. So here's the deal. They are all sort of trying to do the same thing, but Iron has this contract and the others don't. I mean, this is not something Microsoft just throws around. This came in November, which is where we're at, but you can see the stock price hasn't performed great in November. But at the same time, this is a long-term deal. So a lot of this is happening in Texas, in the South, maybe in Alberta as well. They have this $6 billion agreement to get GPUs and equipment from Dell. So they've also secured some power to make that happen, which is going to be the biggest unknown for actually making a lot of this compute happen. And I think that Microsoft deal may have helped them get that power. It certainly helps to have some credibility. And crypto has done horrible. I mean, recently, it's not really just about transitioning to AI. It's also, sure, Bitcoin had a bounce recently, but we went as low as, what is this, 85,000 that we went as low as? Almost 80,000. So you have to kind of be careful here. Ethereum isn't doing great either. Obviously, they track each other. And ever since this liquidation names, these names have just drifted down. So there's going to be a lot of other companies that bridge the gap on the way to data centers, compute, this open AI vision. Natural gas is going to be leading the way. So some of these natural gas providers, some of these energy providers, next era is going to be in the conversation as well with battery storage. But until we get there, I mean, you can look, Oklo has come down significantly. We have to get not only what's going to be needed, but also the timing on when that's going to be needed. And right now, it's pretty clear that it's not time for nuclear yet. So we don't have to worry about buying nuclear, buying Oklo. These other nuclear companies aren't doing well either. And I mean, also in this conversation of getting the timing right, quantum is not even close to being right, being ready. So these quantum companies haven't done anything really at all in the past 2 months. So we're just trying to pick the right sector. And I think Iron, it's one of these speculation names that is sold off, this AI data center compute sector, that also has a prayer at being relevant in the near term over the next 12 months. So could definitely see a move up similar to WULF for Iron. Now, the other ticker is Albemarle, and this is the recent earnings, over $1 billion in revenue. You can see that the earnings per share was better, still a net loss, but better than expected. And it looks like we could get some tightening and a breakout here These are a couple tight days. You can see that pretty clearly over the last 30 days. This looks pretty, right? It's just sort of giving a really clear tight risk reward where maybe you risk literally $1 and look for a move of $10 or more to the upside. So it's gone on a crazy run. This run after earnings is 45% just since the beginning of this month. But it's at an important spot right now. So if it can get another 20%, 15%, I think that's pretty possible for this company. It's not something you want to just sit in for the next 3 months because it could definitely retrace, but that's ALB. So they do lithium batteries, not just pure lithium. So you can be a little bit careful rather than just piling into Lithium America, which people have talked about doing and have talked about doing that in 2021. Of course, like all the software companies, this company, was higher back then than it was now. It had a resurgence in late 2021 and then really dumped after 2023 onward. Lithium in the US is very important. It's in the same rare earths conversation. But right now, you don't really need rare earths if these conversations with China go well. You could see this was the 10-10 Trump-Xi talk about rare earths, how China's going to limit the export of rare earths, so this thing skyrocketed even more. And then it just sold off after it was revealed that, it was basically a miscommunication. And Lithium America sold off as well. So these are kind of all in that bucket. ALB notably did not sell off. It just kept chugging along. So it's sort of a diversified play on lithium and other battery materials. And it's a $10 billion company. So it's a chemicals company. It's not just a lithium mine. So that's why it's so strong. $1 billion in revenue is up a tiny bit. They did have a net loss, but more free cash flow. So a little more flexibility there. And as long as they can continue to hang around and be the go-to energy storage chemical supplier to help build out these batteries for smoothing out the power created by wind and solar to provide power for data centers, then they're definitely going to do well. And again, as we saw with Lithium America, this is sort of a boom and bust company so far because these data centers and these electric cars haven't reached mass scale. But this company seems to be holding. It is sensitive to commodity prices, but based on the chart, it doesn't look that sensitive. Over a 5-year chart, maybe, it's down significantly. But all we really have to worry about, right, is how sensitive is it to market movements, to tariff comments. It's definitely followed the market down and then back up. And is there a story here that can make it hold up even as the market goes down? So relative strength. And there is, and that story is chemicals. So it's not a 5-year hold or anything like that, but this is definitely the play if you do believe in buying it for a month or so. Well, not that you want to buy it with the intention of holding it for some duration, but if you want to look for a move up 10%, sell a piece, and then hold the rest with a trailing moving average. Electrification, battery demand, and lithium are the reasons to buy this. So here's some similar tickers. The one that is actually most connected is Lithium America, that's on the NASDAQ and NYSE. This SQM has been mentioned before, but it's in South America, and anything that is a little less of a pure play is more stable in, we can literally see it in the chart. That's not really a question. So that's the idea, ALB. And we can take a look at Lithium America. But right now it's not doing well. It's just selling off with the rare earths company. So that's pretty much where we're at. EOSE is one other company to take a look at for battery storage. It's in the power generation space. It looks like this. Recently sold off, sort of bottoming. And if that can make a move up, that could definitely have a tug effect on ALB. Although EOSE is much smaller. So that's the idea. ALB along with iron is the main idea. And they're both sort of depressed right now as the market has sold off in the last couple of weeks and just recently had a rebound. There's tons of stocks that are depressed, but there's also tons of stocks that already had that rebound. WULF being an example. And a lot of these pharmaceutical stocks and the PPH went up significantly. So you can't really, there's some stocks setting up. TVTX looks great, but you're risking a QURE or an NTRA type, NTRA is actually doing well, but NTLA type move down. So for that reason, I think it's best to stay away from biotech right now. Stay away from data center stocks that already went up, that already bounced. And, you can't buy NVIDIA right now, in my opinion. It looks choppy. You can't buy Meta right now. It's bouncing, but you don't want to buy a bounce, and it's unclear if it's going to recover this tax hit anytime soon. Amazon looks so-so. Already had a bit of its bounce, and Google's up significantly. So, by process of elimination, you end up heading to basically industrial stocks, and you end up looking at sort of lithium stocks and chemical stocks and any sort of sector that has a little bit of life in it. And I think iron is a play there. ALB has the revenue, $1 billion revenue, if you're looking for something a little more stable. So those are the two ideas. You can see iron moves about twice as fast. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to try out our 7-day trial of stockscommunity.com, you can head over to stockscommunity.com, the first link in the description. You'll see some testimonials over there. And you can drop into a little Q&A screen share and take a look at your portfolio, see if we can help you out. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.